Hey, everybody. Welcome to another episode of the Remote Real Estate Investor. I'm Michael Albom, and today we have with us our Roofstock Certified Agent out in Columbus, Ohio, Harvey Yergin. And Harvey's going to be talking to us today about the Columbus market as a whole and some things that we as investors need to be aware for if we're going to go invest in that market. So let's get into it. Harvey, thank you so much for joining us today, man. Really appreciate you taking the time out of your busy schedule to chat with us about Columbus, Ohio.
Yeah, sure. No problem. Glad to be here.
So tell everybody listening, are you a Columbus native? Where did you come from? I feel like that's on where did you come from? Where did you go? And how long have you been? The same thing. And how long have you been in the Columbus market?
I have been in Columbus, back in Ohio, for 6 or 7 years now. Well, close to 6 years. I'm originally from Akron, Ohio, which is closer to Cleveland. Moved around the country a bunch, spent time in Virginia, Tennessee, Oregon, Michigan, had a bunch of kids, and decided we wanted to get closer to family. And if you do a little bit of research on Ohio, no offense out there to other Ohioans, but Columbus it's got the most going on in Ohio.
Those sound like fighting words to me.
Population growth is exponentially higher than the other two major markets in Ohio, Cincinnati and Cleveland, and there's just way more industry here. They're just plain simple. There's just more going on in Columbus. So we landed here. We're close to family. My wife is from Pittsburgh. So we have a support system here now, and Columbus is home.
Love it. That's awesome. And how long have you been a realtor? And then how long have you been in the real estate game? Because I know we were chatting before the episode, you're an investor as well. Yeah,
I'm an investor. I spend most of my time in my investment company and working on investments. Been a real estate agent since 2018, so 3 years or so. And like I said, primarily working in my own company with my partner. But then also just by nature of being an experienced investor in this market, also helping buyers and sellers buy and sell their real estate investments as well.
Awesome. And how many transactions have you done in the last 12 months? Like number of purchases, number of sales?
Oh, I don't know, a few dozen, most of which are representing our company in the purchase or sale.
Awesome. And so did you get involved in the transactional side of things because there was just a need for it because you were doing so much business basically for your investing business on the personal side of things?
I got involved as a real estate agent primarily to, I think this is a common story, but get your license so you can save some expenses and costs.
On the commissions,
on the transaction, on your own transactions. And then, obviously there's some money to be made if you're representing other people. You have a little bit of a niche in that you understand transactions maybe more so than other real estate agents because you buy and sell for yourself and you're familiar with real estate investment transactions and deals because they're, as you know, they're very much different than your retail sales. And I like helping people. As long as those people want to be helped. I like working deals. I like putting deals together.
That's great. All right. Well, now I want to give you the platform to yell from the mountaintops how great of a market Columbus is. So talk to us about some of the economic drivers and talk to me like I know nothing about Columbus. And truth be told, I don't know a whole lot. So that should be easy for you to do.
Sure.
But so what are the big economic drivers in the market? Who are the big kind of companies that are in the space? And do they have a tech scene?
There's no secret anymore. I mean, the Columbus as a market for real estate investment, that information is out. It makes every top whatever list for real estate investing. Mm-hmm. And there's two big factors there, maybe three. One is population growth, something like 1 million people in projected population growth between now and 2030 or 2040 or something like that. So wow. A lot of people in a short amount of time. Industry here, mostly retail. I call it junk retail and fashion retail. So Big Lots is here, Dollar General is here, but also L Brands, which is the biggest employer in Columbus, they're here. Designer Brands is here. So people like Abercrombie and Fitch, DSW, I mean, big fashion retail businesses are here. And then, I mean, if you've ever heard of Nationwide insurance
On your
and,
side.
yeah, right. So insurance is huge here. There's several big players, including Nationwide. And then healthcare is also large because Nationwide plays in both sides of that. So they run a couple really big hospitals and facilities. And then if you've ever heard of the Ohio State University, they're a top 5 employer here as well. And not only do they have the university itself, but they have several research and medical facilities around the region. Technology is largely based in those industries. There's a lot of in financial services. I forgot to mention Chase is here. Financial service technology, innovative insurance technology, medical technology, and then all of the technological research and development the university is doing as well. I mean, there's a lot going on.
Right on. So is it safe to say then that it is a multifaceted economy? It's not solely reliant on a single sector?
Right. Yeah. I mean, I don't know what I named there. Maybe 3 or 4 different sectors that are just in the top, 5 employers in the area. There's a lot going on in terms of different industries and diversity.
That's fantastic. So that maybe you can give us kind of a walkthrough of, if I'm looking at Google Maps and I type in Columbus, I get a north, south, east, west over, 30,000 foot view. Talk to us about some of the different markets, different sub-markets within Columbus that we should be aware of.
Yeah. So if you look at a map, you got I-270, which goes around Columbus. Generally inside of that is Franklin County. It extends a little bit outside of that as well. So inside of Franklin County, obviously you have Columbus, but then you have really close in suburbs like Westerville, Gahanna, Reynoldsburg, Grove City, Hilliard, Powell, and there definitely is a couple other ones around there. And those are the close in suburbs. And all of those cities and municipalities I just mentioned are super hot and saturated in terms of both retail and investment real estate. Deals are just hard to come by there as they are in a lot of MSAs. But if you extend out, which the pattern now that we're seeing is that investors are starting to move out, and it's because people are starting to move out as well. There's just cheaper houses. There's not as much of a demand right now anyway to commute to a job downtown. And even if you are commuting, it's likely that you're commuting less frequently. And maybe you're okay with a 45-minute, 60-minute drive now because you're saving $100,000, $200,000 on a house, and you're getting more acreage and you're getting more space. You're now okay with a 45-minute drive. So places like Lancaster and Newark, Delaware, maybe Mount Vernon, which is to the north. Lancaster's to the southeast. Newark is due east. Places like that, which are 45 minutes average driving time to downtown Columbus, on fire. I mean, Newark, if you told me that Newark, Ohio, if you told me a year ago that Newark would be a place where you could buy a house, do a little bit of rehab, put it on the market and get multiple offers over asking, me and a lot of people would tell you you're crazy, but that's exactly what's going on. And some of the best deals to be had are out in those peripheral markets.
Oh, that's wild.
Yeah.
And so give everybody an idea of, like, if I'm a single family investor, I'm looking for a 3-2 that'll have a good rent. What are some of the price points in those 4 markets, those 4 neighborhoods you just mentioned, as well as their corresponding rents? And just, ballpark average.
Yeah, I think it's pretty fair to say that you could find a 3-2 for between $130,000 and $150,000, and rent is going to be between $950 and $1,150, depending on your specific location and some features in the property.
Awesome.
Which
okay,
a 3.2 at 130 to 150. Good luck finding that in a lot of areas.
I'm a California guy, and I can pretty well guarantee it doesn't exist so much out here.
Yeah, not even in Columbus.
So when you're looking to underwrite properties at Roofstock, and for those people that aren't familiar with you, you're one of our Roofstock certified agents out in Columbus. And so if not the certified agent out in Columbus. So when you're underwriting properties on Roofstock that go on the select program, what is it that you're looking for?
The big things are rehab, a lot of things that make the market, a lot of properties that make the market now in Columbus. And just as a disclaimer, right now on Roofstock, even though I'm mentioning these peripheral markets, we're the only properties that are available to Roofstock investors are the ones inside of Franklin County, really, because it's because of on the property management side, there's not a lot of infrastructure for investor support yet out in those markets.
Okay.
So we're limited to that Franklin County I-270 close in ring. And what we're looking for is minimal rehab, things that hit the market at certain price points. You can just guarantee or just assume, I guess, that if they're under a certain price point, they probably got some issues with them. Mm-hmm. And we know that Roofstock investors, they're not, especially because most of them are out of town, they're not really keen on having to manage any sort of big rehab project with people that they don't know in a town that they can't get to frequently.
Right.
Minimal rehab being $5,000 or less on average. And then neighborhood quality, because neighborhood quality translates to tenant quality. And so we're looking at the neighborhood rating score, and then gross yield. I mean, just how much rent can you get compared to the purchase price, which that number is shrinking with every day that passes. I think with time we'll start to see rent start to, it's lagging now, but it'll start to inch closer to the kind of growth that we've seen in sales prices. But so those are the three things: just minimal rehab, making sure we're hitting a minimum neighborhood quality, and that the gross yield is something that will produce cash flow.
Love it. And Harvey, can you talk to me a little bit about how to calculate property taxes? Because in a market like California, our state, we kind of have a statewide law that says that property taxes are going to be based on the sale price. So if you bought a property 10 years ago for $100,000, your property taxes are based on that purchase price. If I buy it from you now and I pay $500,000, my property taxes are going to be probably at least 5x what you were paying. So how should investors be thinking about property taxes, and does a sale trigger any kind of reassessment? How does that all work?
Yeah, the sale doesn't necessarily trigger a reassessment, but the local school boards, and this is municipality specific. So if you're buying in Columbus, this is true. The school boards are they have a really good process for going through, finding recent transactions, making an appeal, and getting that value updated. Which, because they want their funds, they're trying to capitalize on a market that is appreciating, and they want their programs and their facilities to grow right alongside it. So you can't blame them, but it's happened to me, and it can be quite sizable. So look at the auditor site, figure out what the tax is based on now, and then figure out where you think you're going to purchase it. And you can get a reasonable idea of how much that tax bill is going to go up. Outside of Columbus, I don't really know, but in Columbus, that's very common.
Okay. So if I'm looking at a property that was last purchase at $100,000, and the taxes, let's call it, were $1,200 a year. If I'm going to then purchase the same property at $200,000, is it a safe assumption then to double the property tax because the purchase price has doubled? So now I'm thinking I'll be at $2,400.
If you're underwriting it, I probably would do that. It's probably not that exact. I think there's some formula. I forget what it is, but they take a certain percentage off of that, and then they tax you on that percentage. But yeah, that's probably not a bad place to start for your calculations.
Okay, perfect. It's funny you mentioned the school boards. I had the exact same thing happen to me numerous times down in Cincinnati, because I'm pretty heavily invested down there. And and it's funny, because part of me feels really great about being able to help the local school systems get funded and grow because everybody wants to be part of a good school system. So if you're coming into an area, you're then donating, for lack of a better term, more money to the school system, which will hopefully bring it up. But at the same time, it's like, man, this sucks. Like, it is just so expensive oftentimes to do business. So it's a catch-22.
It is. And in theory, it should come full circle. You'd think as the schools improve, the neighborhood improves, your neighborhood and consequently your house becomes more desirable. Yes. And then, that kind of feeds itself. But that assumes, obviously, that the school board is handling your funds with some sort of proficiency.
Yes.
Which, I think in Columbus, they do a pretty good job. But I will also say, if you're taking out a loan on these and your servicer is a little bit slow to, I don't know what their process is, but if they're slow to make sure that your escrow account is enough to keep up with that tax increase. What happened to me recently, I have a duplex in Columbus we bought for, an increased amount over the last purchase price. My servicing company didn't know for 2 years. So, and then just this past year, we got, you owe tax on the increased value for the last 24 months. We need to double your PITI, your mortgage payment.
To catch up.
For past payments and future payments.
Oh my gosh.
God, that would have been nice to have just incremental increases over, a shorter amount of time.
Wow.
So, yeah, it does happen.
Well, that's a great tip for everybody listening is look out for that stuff. I mean, if you know what your tax bill should be and your mortgage service company isn't taking enough from you and to make those payments, speak up, say something. That's a really good teachable moment.
Yeah, you're going to get notification from the auditor or the treasurer
from the county.
When your tax is increasing. And then if you don't see increases in your payment on that property for a couple months, it's probably time to call and start asking questions because you don't want that surprise in 24 months.
Yeah, that's not a fun present.
No, not at all.
Harvey, talk to us about some common issues that might show up on an inspection report in Columbus that folks should just be aware of. As an example, I bought property in Alaska and they have diesel-fired boiler to heat the house. That's just commonplace. Me being a California guy, I was like, whoa, major, major hazard. And everyone was like, calm down. This is par for the course. So what are some things that you see that buyers should be aware of?
Wet basements, bowing basement walls. Those are scary things, especially for people who A, aren't familiar with basements and B, aren't familiar with basements that were made to be wet. Houses, there's a lot of old inventory in Columbus, and a lot of that old inventory, for what I understand, was built to take on water. That doesn't excuse poor water control from your downspouts and your gutters and your grading, but it can cause bowing and it can cause signs of water intrusion. Remedying bowing basement walls is a very common practice. Going in and having to waterproof a basement that's not already waterproofed is a very common practice. The selection of contractors that do that is very high. I mean, there's a lot of contractors out there that do that kind of work, both remedying the bowing and the waterproofing. So don't let that scare you. If anything, it's a negotiation tactic with whoever you're purchasing from. With that old inventory, there's still knob and tube electric work in houses, which can be scary for people. But again, there's contractors that can handle that sort of thing. I've had to do it several times. It's just not that big a deal. Being on well water or having a septic tank instead of public water and public sewer is just not that scary. One, buyers, especially if they're native, they understand. Renters, as long as things are inspected and safe and functional, they understand as well. In certain areas, I mean, in Columbus, it's very rare. In fact, I think they've almost gotten rid of all septic tanks. Anybody who's not on public sewer or public water, but just outside of the city, that's pretty common, and it should not be a deal breaker as long as they're functional and they're safe and they've been inspected.
Great. Those are three really good ones. Because as you were saying them, I'm over here like, oh, like that sounds awful. So that's a good learning lesson for me too. I've never heard that some of these older properties were built to take on water. That is a totally foreign concept to me.
Yeah. Yeah. When I heard it too, I was thinking, who the hell would build a house that's where the basement's supposed to get wet? But yeah, it just was the way they built them.
Okay. They don't make them like they used to. That's for sure.
No, they don't build basements to take on water anymore.
Do you have any interesting stats or kind of notable highlights that you'd want to share with potential buyers or folks interested in the Columbus market?
I would say the inventory levels here in Columbus right now are pretty interesting. It wasn't long ago, there was 1,300 houses on the market. And I just looked today and I think there's 2,900 houses on the market. Some of that is seasonal. I mean, things just tend to loosen up around this time of the year anyway. But that's a pretty sizable gain. And we're starting to feel it a little bit. It's not as crazy. Inventory is starting to sit on the market a little bit longer than it was this summer and spring. And prices aren't as crazy. Maybe it isn't as many offers. So it is getting a little bit easier to purchase. We run a real estate investment company. We go direct to seller. The more difficult it becomes for anybody to purchase, the more difficult it becomes for us to purchase. And we're seeing a little bit more ease there on the purchase side. I would just encourage investors, Roofstock investors who are interested in the Columbus market to just continue to be patient. I've been a Roofstock agent since early spring of 2021. Guess how many transactions we've completed for Roofstock purchasers? Zero.
Goose egg.
Yep. And it's just tough. I mean, finding a rehab property that is on the MLS and marketed already, that isn't one, going in 24 hours, or two, doesn't have the rent to support the purchase price. To date, it's just been it's just rare. It's really hard to find. But like I mentioned, things are loosening up. Continue to be patient, and I think there will be deals to find. And I would also encourage through the winter. So let's say late September through March, keep paying attention because that is the time to buy. Because historically, the market is more buyer friendly and less seller friendly.
Harvey, are you trying to cut into my turkey time? You telling me I got to go look at real estate deals and I'm trying to eat stuffing?
If you want to buy deals and build long-term wealth, yeah, I guess I would.
It's such a good point. I bought so many deals in that exact time frame for just that reason. I mean, I joke at it kind of saying tongue in cheek, but I think for folks that kind of take time off, that's the wrong time to take off. I say if you're going to sit out, anytime, do it when the market's crazy hot. So when there aren't folks out there trying to buy up deals, when everybody else is taking a break, that's when you should be pushing the pedal to the metal.
Yeah, sure. And it takes some discipline too, because I came from like corporate America and a regular job. And that time of year is where everyone kind of slows down, takes vacation, doesn't take work so serious, holiday parties in the office. But yeah, I mean, to just say, okay, this is our plan for fourth quarter and into first quarter of 2022 and stick to it and be disciplined about it. I mean, you can make or break an entire year off of a deal you purchase in December.
Easily.
Yeah.
Easily. No, I love that, man. And I'm curious. I mean, you bring up a really great point that there haven't been any deals done in Columbus. So I would challenge everybody listening to go be the first person to get a deal done, win that race. But also, what should folks be aware of, or what would you coach or recommend people on that they need to do in order to win deals in this market? I mean, we're recording this late August of 2021, so take this with a grain of salt, depending on when you're listening to it. But right now, what are you seeing folks? What do they need to do?
Be reasonably aggressive on your purchase price. Not aggressive, but just be reasonable on your purchase price. I mean, just assume that the deal that you're offering on is being offered on by other people. Now, certainly you can submit offers below asking, and certainly you should submit offers at a price that makes sense. In fact, I would just encourage you to make offers, because it's just like fishing, right? It's a numbers game at this point. Don't be overly freaked out by an inspection. Recently, I had a deal blow up when the inspection came back we had a 10-day remedy period in the contract, which just means that we get the inspection, we read it over, we decide the things that we don't like, and then we ask you to either fix them or give us money because of them. Use the remedy period. You ask for things, all they can say is no, or maybe they say yes. And all of a sudden now you have a deal with less cash in, or a deal that is fixed up and better than it was when it was on the market. Use that period to your advantage. Don't run off just because there's some scary things in the inspection.
No, those are great tips. And how are you seeing all cash offers playing in the Columbus market right now?
They're frequent, and they come from institutional buyers quite a bit. There's hedge funds and institutions that we're all competing with, and they throw down big chunks of cash, and they often buy multiple houses at the same time. However, I've seen sellers opting to be more patient for more money than jump at a cash offer just because they can close in 10 days. So cash doesn't always win. It looks like maybe they're winning less frequently. I don't know that for sure, but it seems that way, that sellers are being more patient, thinking, okay, I can wait 30 days, 25 days and get $20,000 more out of this. Okay, well, let's
seems like a pretty good ROI.
Yeah, not bad. I mean, and good lenders, they're closing in 21 days. So if you come in and you're pre-approved and your lender is legit and they're going to move on things quick, I mean, 3 weeks, and the seller can make, several thousand more dollars. What you can't compete with really is a cash offer at or above asking that closes in 10 days.
Well, that's really good to know. That's really good to know. Harvey, this has been awesome, man. Are there any other thoughts, tips, tricks, insights that folks should be aware of about the Columbus market?
Be patient. And like I said earlier, I'd make offers and pay attention. Keep paying attention, especially through the winter months.
Perfect. We'll have our heat vision goggles on because I know it gets pretty cold out there.
Yeah, I can.
Awesome. Well, Harvey, what's the best way for folks to get in touch with you if they have questions about the Columbus market, about property management?
Yeah, feel free to email me at harvey.yergin@gmail.com. You can also text or call me, although I'm usually faster to respond to text at 901-484-9751. I'm also on Facebook. Our investment company, Simple Solutions Real Estate, is also on Facebook. I'm all over the place. Reach out and love to connect.
Right on. Well, thanks again, Harvey. This was really great. Appreciate you coming on.
Yeah, man. Thank you, Michael.
Take care. Talk to you soon.
All right.
Alrighty, everybody. That was our episode. A big, big, big thank you to Harvey. I know I learned a ton about the Columbus market. Very much looking forward to continuing to learn about the market and seeing where it goes from here. Sounds like some really big things coming down the pike. If you enjoyed the episode, feel free to leave us a rating or review. And as always, we love to hear comments or future topic ideas. So let us know in the comment section. We look forward to seeing you on the next one. Happy investing.